Hey guys, welcome back. Are you still taking trades when you shouldn't have? Or are you still struggling to be consistently profitable? Or are you still trying to get funded but keep losing your challenges? Or are you new to trading and want to learn the right way from the start? Well, I've got something super valuable to share with you guys today. A strategy that's so easy to learn, easy to execute, and incredibly effective in generating consistently profit. This strategy is designed for everybody that's still, doing a day job to fit into those busy schedules. It's only requiring 1 hour of trading per day. As simple as it sounds, it still packs a powerful punch. So, I will set or provide you with a set rules that will enforce discipline, patience, and this strategy will change your trading game. No more impulsive decisions or emotional trading, just steady, reliable profits. And the best part, once you manage to master this strategy, you will be able to turn prop firms into your new ATM machines, ready to dispense any profits at your demand. So, if you are ready to transfer your trading career and change your life forever, then just stick around with this channel. I'll be sharing all the inside tips, tricks you need to know to succeed in trading. But enough of the talking, let's dive right into the charts and uncover the secrets of this so-called deadly trading strategy. Alright, but before we start, let's go to the chart. You have to know a few elements of this first. First things first, you need to understand what it is if I refer to a swing point. A swing point basically is a three candle 1, candle 2, candle 3 pattern, where candle 1 and 3 in this case, the lows are higher than the middle candle. And if you want to do the inverse, when you find two candles on either side of the middle candle that's lower than the middle candle. Let's look at examples. In this candle here, you see a white candle, and a black candle, and a black candle. So this big white candle and this second black candle, their lows are lower than the middle one. So that's a swing point. Same with this one here. You get a small black candle, big black candle, and a large white candle. But the first black candle and the large white candle, their lows are higher than the middle candle. And I mean, there's plenty examples here for you to look at. Then we need to understand structure. What is it when I talk about structure, breaks or any change of structure? So when you look at this, this candle, all these candles, you'll see prices going down, form a low, then prices going up, form a high. Then it goes down, form a higher low, so that low is higher than these lows. And then prices going up higher and forms a higher high than that high. A higher low, higher high, higher low, higher high, higher low, and that's where we are. Every time price takes out, in this case, a high and close above it, that's a break in structure. That swing high, remember 3 candles, once we've broken that and closed above it, not just spiked through it, but closed above it with the bodies, that's a break in structure. And the same can be look for the inverse when price is going down. So that is a swing point there. That was a high there. Now this candle that made a wick through it, that's not a break in structure. You want to wait for candle bodies to close above that. So these two highs were taken out by closing bodies. That's a break in structure. All right, now you know the second element. The third element is we want to look for discount and premium areas. So what you want to do, if you think about it, which I'm going to show now, but just think about it this way. If you're a business owner and you buy some stock, you want to buy it at the lowest price and go sell it to the consumer for the highest price you can. All right. So how do you do this on a chart? So basically what you do is, let's look at this example here. I'm using my Fibonacci, and what I do is I'm using a swing point low versus the that range where price was pushing higher, the swing point's high, and then I find the 50% mark of that range, which is obviously over here. Then I can take that off. Now every time I'm expecting, because the structure is making higher highs, making higher highs, I need to see price to go to that high. But I'm not going to buy here because it could turn against you. You want to buy below the 50 price. Below the 50% level, that's your discount area. If you look to sell and you look for a premium, you do the same on the opposite. And I'll show you examples just a bit later, but just to explain. Then everything above 50%, that's where you want to sell. So you can't look for buys up here, because I mean you're not going to run a profitable business by doing that. Okay, so now you've got those three elements. We want to know swing points, we want to know what structure is, and what discount and premium is. Every day when you come to the charts, you're only going to come to the charts for one thing, and 1 hour only. Not for, let's look at all charts all day long looking for opportunities. You want to first set your time for UCT -4. That time zone is in New York time. We always look and work in New York time. So I'm looking at a candle that forms at 9 a.m. New York time, which is this candle. Yeah, you can see at the bottom, it says 9 a.m. So once that candle closes, you mark out the highs and the low of that candle. And those are the parameters you're going to work through the next hour. So once you've done that, you move back to a 1 minute chart, and we're going to see that we've marked it out. So that's the low, and that started at 9 o'clock and it's up to 10. So now you want to wait for the 9 o'clock candle to finish. I think there's one minute or two left, which we in replay mode, so we'll go through that now. The premise of this is you want to see price induce people to go in one direction, reject, and then go the opposite direction. So it will punch through and trick all the breakout traders to go long, to buy above this high, because with this higher highs, higher lows, people think the pattern is going up higher, so then they would buy. But everybody who's sold will put their stop losses there, and if you really look at it, we've got some pretty good equal highs up here. That's a liquidity pool for for buy side. And what that means is everybody who actually sold put their stops there, because in retail language, this is a support level and price should not go there. And so, by the way, these highs were holding that level quite perfectly. But for us, we trading from liquidity to liquidity. So in this example, this is a very high probability, if we get the right setup, where price will induce people and then reject, and then obviously break structure and go the opposite. So let's have a look. Let's go forward. Prices. Now that's the first candle that formed at 10 o'clock. You will only look for this setup between 10 and 11, the next hour. It's only 1 hour of trading. You use the 9 o'clock hour to determine the high and the low, and now you want to see if you're going to get a setup to go to the other side of that candle. All right. Then we see, okay, so now people see we're going long, and then at some point this candle went up and take all the stops out and induce people to go up. Now we're looking for the swing, the last swing point that initiate this run. And if you really look at it, this little swing point here, that black candle's low is higher than the middle, the white candle. So that is your swing low. We're not using this swing low or this one. That was the last swing low that induce or initiate this push up to take out this liquidity. Now we want to see a shift and a body close below that swing low, and that will be in this case we get this big black candle and it closed below that. Now that's a change or break in structure. So now we're saying we've induced people up here, we tricked people up here, we stopped them out. Now we're taking the market the other way. But for us now, we're not going to just sell down here. We now need to find out where is the best price, which is 50% of this move. And we're going to take this off. So, and let's just call it 50%. And let's call this break of structure. And just okay. So now we want to see if price goes lower, then obviously we need to adjust and make sure we're still within. I mean, if we go lower, yeah, we got to find 50% of the new low. But at this point, that's my low. So I want to see what price does from here. Okay, so price just do some nothing yet. And then we've got this big. Now this, if you're not used to this and you see this uptrend, people might think we're going higher. Look, trading is not perfect, and this could go higher. But in this case, that is where we will look to obviously sell, and we will put our stop loss right above that high, because we should not see price trade higher, because if it does, then we were wrong, and then we need to wait. We need to wait for the setup to form a new structure, break in structure till we're right. And what I normally do is I look to target a 2-to-1 risk reward, because over time, because this is a highly probable setup, you'll make money by just taking a risk ratio 2-to-1. So in this case, this swing low would be a target for price to, sorry, let me just get that one right. That's target 1. Let's just TP1, and then we've got nice equal lows here, which is high probability, and then we've got the low down here. Let's just make that TP2 equal lows, and then obviously you got the low that is your final target. So, and if you really want to, I mean 2-to-1 is what you can see the potential of this trade. This trade can give you a 4-to-1. So if you really want to stick with this trade, that's what you can do, and let's see what happens. Price is still up there, and now it's starting to move in our favor. And okay, what do we see here? Just so we're still in the same mindset. Okay, we've got a new swing point here, and we just closed above this swing point, so that's a new break of structure. Just so you guys can see. So what you could do could find 50% of this again to see where, I mean, that could provide you another entry if you really want. But if you're just going to stick to the strategy, that's what you got to stick to. Okay, so first take profit was hit, and that was hit in, I mean, if you really look at it, 1, 2, 3, 4, 5, 6, 7 minutes. 7 minutes of trading, you're done, you got your 2-1, you can walk away and, I mean, go on, carry on with your life. But if you really want to maximize, you can take, say, half of your profits off here and see if you can take this trade all the way down to the bigger target. Now you see some big retracement. That's where you can find equilibrium. But in this example, or we broke structure again, we should not see price take out that high. But I'm not going to enter another trade. I'm just going to leave it like that, and let's see what it does. As you can see, price goes up, rejects, and did not get close to that high, and you would not have been stopped out anyways. And we just play around. Let's just move forward and see. So we've got a new break in structure, and we're about to take those equal lows out, and there we go. Equal lows are out. That was a 3-1 easily, and I mean, you can still hold. There comes a retracement, and that's the key thing for me. I mean, when it first sets up like this, take your 2-1. I normally take my full 2-1. In this case, I would have held or have held for this trade actually, for the equal lows. And but if you're new at this, take the 2-1s, get comfortable with the strategy, and let's see. But just so you can see that price actually did play out. I mean, it traced up deeply, and we managed outside. Okay, so this is at 11 o'clock. This is when your trading stops. You're done for the day. You don't take any new trades. You don't mess around. It's 1 hour a day. And I'll explain now why you're focusing on that 1 hour a day. And there we tapped into the low, and that's done. So the target from the one side to the other side was met, and that's done. Also, if you really want to trade, your job as a trader is not to sit in front of the charts, 10 hours a day trying to figure out all the swing points and structures, and you'll just get wrecked if you want to do, if you're going to do that. The key thing is trading was designed for people to trade for the least amount of time, get in the market, take some money out, and walk away, and go on with your life. And I don't know, if you make a good living from this, which you can. That's when you travel, you live your life. You don't, this is not a 9-to-5 job. This is something to build wealth and to give you more free time to obviously enjoy life. So, and that was, the strategy. All you got to do, step one, you got to take the 9 o'clock candle, mark out the highs and the lows. The idea is for market to trap people to go in one direction and then go to the opposite. You want to see a market structure that gets broken, or the last structure point that initiate that inducement, and then a shift to the other side. And then you just got to look for a premium or discount zone, depends on whether you go long or short. And then you target a 2-1, and that's done. You do that. This is a consistent thing. You got to do that. If one of these things are not at play, or if you've taken this out but there was no structure break, you don't take the trade. If this thing was just moving sideways within the two lines, you don't take a trade, regardless if there was anything in between. You gotta stick to the rules for this. This will make you consistent. It will be profitable, and there's some other more advanced features to this that I'm not going to obviously discuss in this video right now. But if you just stick around, I'm going to trade these things live. I'm going to take a funded account and show you guys by just taking this trading strategy that you can make money, you can withdraw money out of these things, and you'll be successful. And that's all that you're going to need. So if you haven't yet, just like and subscribe to this video, and I'm going to make more of these videos, and I'm going to also do some live streams on these, and I'll show how I take some live ones, and I will also show every week the trades that we've taken, and I'll have a full track record of where we are. So it's one thing to look at history setups to pick the right ones to show you guys how great it works, but because I'm linking this to a funded account, I can actually show you guys these parameters, and there's very specific rules that I'm trading there, and I'm going to trade this strategy, and to show you guys it actually works and anybody can do this. If you guys got any questions, just pop it in the comments and let me know what you thought. Give me a like, give me a share, subscribe, and all that fun stuff that will help the channel. And I will make more videos like this, and if there's anything specific, just let me know, and I'm going to add more advanced features on follow-up videos. Have a great Sunday, and safe trading. Take care. Bye bye.